Money Talk with Melanie features lively discussions of a wide range of global, domestic, and kitchen table financial topics. Guest interviews include entrepreneurs, CEOs, and politicos who are experts in their fields. Be sure to listen up. This is important because it's your money. Your money. Be sure to listen to Money Talk with Melanie. Money Talk with Melanie. Thursdays, 7 to 9 p.m. Eastern Time on 98.7 The Coast.
And welcome to another edition of Money Talk with Melanie. I'm your host, Melanie Collette, broadcasting live from beautiful Wildwood, New Jersey, here on 98.7 The Coast. It is beautiful, but it's cold. Listen, May. I don't know if you have your calendar, but it's still like 50 degrees. What's the problem, May? It's not March. It's May. Get it together because it's cold. It's beautiful here in Wildwood, but it's cold, and all of us here in Wildwood are not good with that. So if you could go ahead and get warmed up, we'd appreciate it. Sincerely, all of us who are freezing in Wildwood. Just saying. It's really cold, even though it's beautiful. And in terms of the Melanie Media Recap, I talked about a lot of stuff on Newsmax this week. They chocked me full of subjects to talk about, and I'm delighted to share that with you this week. I know people are going to be mad that I said this because everyone loves BLM, but BLM, Black Lives Matter, and they do. But they misuse a lot of public money, and the person who used to be in charge of BLM, who got a ton of donations, bought this $6 million mansion, and when she was questioned about it, they haven't filed official tax papers and things like that, and when you run a nonprofit, you're supposed to file appropriate paperwork, and she's crying and whining, I didn't know, and the money came in so fast, and et cetera, all these excuses about the misuse of public money. And, they didn't know any better. We just didn't know. And my position was, well, you could have, put the money in a separate account and Googled it. You could have walked into, I don't know, any bank with the money and said, hey, I'm starting a nonprofit. What do I do with this money? And I feel like any mediocre, average customer service person would have called a manager and said, hey, she's got a check for $1 million. What's the best way to open a nonprofit account with it? I feel like I'm calling BS on this. I feel like there would have been, I feel like when you have millions of dollars of nonprofit money in a bank, that you have access to all kinds of friends that would know how to do that legally and appropriately, and that's a bunch of buffoonery. But instead what she did was she said, black nonprofits don't have enough property, so I'm just going to buy some property. Because, when you don't know what to do with a whole lot of money, the best thing that you can do, the most intelligent financial move to make, is to just guess, especially when you're dealing with other people's money. That's totally what you should do. And actually, no, it isn't. See, this is the problem. This is the problem that I have. You make yourself look really dumb when this is what you do. And then you're saying you're being attacked for the color of your skin, but then you do really dumb stuff, and that's not cool. I'm just saying. So we got to do better. We got to do a better job, people. You should have just said, I just really wanted to buy this mansion. And just be honest. That's the problem. Just don't play the public for being dumb. Because we're not. So just do better, BLM, with your money. When you're spending, people were kind and really empathetic to the plight of when people of color run into bad situations that are legitimately racist, and they donate their money thinking that they're helping, and then you misuse it. That's problematic. Just saying. Also discussed the SCOTUS protest, Roe v. Wade. It is illegal, a violation of federal law, to protest at Supreme Court justices' private homes. Period. Full stop. You're not allowed to do that. So don't do that. It is not free speech. You're not allowed to do that. It's just that simple. It's a violation of law. You're not allowed to do that at a Supreme Court justice's house. Specifically, you're not allowed to do that with the intent of changing their minds on laws. You're not allowed to try to influence their laws. They are persuaded by constitutional law, not by protests. And our laws are designed that way. So that's what we talked about. Finally, we discussed how in New York City, in their infinite wisdom, some schools are not allowing children who are not vaccinated to go to the prom. But they're allowed to go to school. So, to be clear, we're following the science, and they're allowed to go to school all day, but they can't go to the 2-hour prom. And also, is there anyone who is vaccinated who has not had COVID? I'm just trying to figure that out. So like, why? Why are they doing that to these kids? It's a power play, and it's stupid. Like, I just don't. I don't understand. Like, none of what they're doing is making any sense. And kids in New York City are still wearing masks. Why? When there's still no science to back that up either. Ridiculous. Just ridiculous. So you can catch the clips on for all of those over the next couple weeks. If you're following me on any social media, at Money Talk Mel on Twitter, or at Money Talk with Melanie on Facebook. And I do want to apologize if you hear me stumbling a bit on the radio this evening. You might hear me sound like I'm choking or something like that, or just not speaking well. I had a bit of a dental accident last night. It wasn't my fault. It was my dentist's fault. I'm going to throw him under the bus, but I'm kind of tripping over my words a little bit, and my voice is breaking up a little bit from time to time because I had a tongue injury. I don't want to go into the details because I don't want to gross anybody out, but it was bad, and I'm struggling a little bit in my speech, but hopefully it won't be too bad. Anyway, but that's why I'm stumbling a little bit. Like, I don't know if you guys can hear it, but I can definitely feel it. Anywho, our guests this evening are Chris Vanderzyden. She's a principal at Legacy Partners. She's going to talk to us about mastering your exit plan, sell your business, and preserve your legacy, especially you small business owners. A lot of times we have these businesses, they flourish, they thrive, but we don't have an exit plan. Like, what are we going to do when we retire, or, we move on to the next life, or whatever it is that we're going to do? How are we going to handle that? Many people don't have an exit plan. What's yours? Or what are your options? That's what we're going to talk about this evening. And then in the 8 o'clock hour, we're going to get a little bit spicy with Chris Shaver. He is the couples whisperer, and we're going to talk money, trust, and financial infidelity. Believe it or not, that is really prevalent in a lot of relationships, is financial infidelity. And in a recent survey, like 30% of couples said that they felt that financial infidelity was worse than physical infidelity. I don't know about that. I had to think about that. Like, as I was doing research for the show tonight, I was like, I don't know. I got to really think about that. There's a lot I have to think about. There's a lot I have to. I don't like my money messed with, so I don't know. So we're going to talk to Chris Shaver, the couples whisperer, about money, trust, and financial infidelity. That's big. But in the news, listen, cryptocurrency. I don't know how many people are investing in crypto, but the Wall Street Journal said that crypto's price fell 54% from its high. It's dropped $31,000, which I totally believe, because I violated my rule of not really looking at my crypto account, but every once in a while. And I looked at it last night, and it was not good. It was not a good situation. It was a very, very bad situation, and I'm not gonna say what I did, because I don't want to influence anybody. But I took some pretty drastic measures as a result of how my little Coinbase play money crypto account was looking, because it was not. I just did the quick math, just looking at my account, and I'm like, that's no. Those numbers, and that math was not mathing for me, is all I'm saying, with my crypto account. But Wall Street Journal had an article today talking about how Bitcoin had fell. Actually, Shiba Inu was still doing quite well, but Bitcoin was doing terrible, just terrible. And crypto in general is not doing very well. It's really following how the rest of the market is doing, which the rest of the market is not doing well. And it just so happens that in my financial literacy class right now that I'm teaching on a high school level, I'm teaching the stock market. And so every time we go to a live table where I'm showing them different stocks, Amazon, Apple, Google, all these different stock areas. And even today, I was teaching a lesson on comparing index funds like Standard & Poor's to investing in individual stocks. It was really hard to make an argument for long-term investing in stocks. It was bad. It's just been a bad way to go here lately in the stock market. Just saying. So be careful out there with your Bitcoin account, but remember, it's for long-term investing. But cryptocurrency is still just very volatile, and just be careful. But I thought I'd mention that because I haven't talked about crypto in quite a while, and Bitcoin falling 54%, and that's exactly, not for nothing. That's exactly what my account looked like. 54% is about right. That's exactly what the math, when I looked at my balance, that's exactly what the math looked like. So anyway, we'll be right back in a few minutes with Chris Vanderzyden, principal at Legacy Partners LLP, talking to us about mastering your exit plan to sell your business and preserve your legacy.
This is important because it's your money. Your money. Money Talk with Melanie. Money Talk with Melanie on 98.7 The Coast.
Welcome back to Money Talk with Melanie. Our first guest is Chris Vanderzyden. She is an author, speaker, and leading educator on exit planning and mergers and acquisitions. She is a founding partner of Legacy Partners, a mergers and acquisitions advisory firm dedicated to serving privately held middle market business owners to create and execute successful exit strategies, resulting in the harvesting and preservation of wealth. She's the author of the best-selling book, 7 Steps to Entrepreneurial Victory and Master Your Exit Plan, Sell Your Business, Preserve Your Legacy. And I'd love to welcome to the show Chris Vanderzyden. How are you this evening?
I'm good. Thanks, Melanie. Good to be here with you. Thanks so much.
Thanks so much for being here. Is there anything you'd like to tell the audience that I didn't mention in your bio?
I think you nailed it pretty well. My latest book is Master Your Exit Plan, Sell Your Business, and Preserve Your Legacy. And it's all about how to create a strategic exit plan to go from an equity to liquidity position for business owners. So you pretty much nailed it.
I've never thought about that until I saw your theme, so to speak. I was like, oh, I feel like no one ever thinks of an exit plan. You just think you're going to have your business, make money, and then that's the plan.
Yeah. And at the beginning, it's a decent plan, right? We entrepreneurs, they are in innovation, and they just want to start a business. And if you talk to a lot of entrepreneurs and you ask them, why did you start your business? It wasn't because they wanted to babysit a bunch of employees. They really wanted to get cash, right?
Right.
So that's what their focus is, and you're right about that. They tend to focus on the day-to-day matters, making money for their family, providing financial security, but they never really think about the end zone. How are you going to exit, and what does it look like, and what do you want to achieve? So you're right. Nobody ever thinks about it. But now we've got this whole new baby boomers that are transitioning out. They're getting ready to retire. And we also have some really smart cookies coming up, entrepreneurs who are realizing that a great way to create wealth is to build a business that can be sold for millions of dollars. So we've got, I teach a class at Harvard on exit planning and M&A. It's for their entrepreneurship and innovation class. And these are young folks, and they're entrepreneurs, and they're becoming serial entrepreneurs. They're building businesses and selling them, creating great wealth, and building another business. They're flipping businesses like we flipped houses.
Well, that makes sense. I think one of the things that the pandemic did is made people look around and go, this not working thing is kind of, I'm kind of good with this.
Right. Yeah. No. I mean, you're right, Melanie. People are taking control, and they're saying, how can I create financial stability? Because the corporations aren't always that financially stable, are they?
Right. And I think the other thing that happened is that when people lost their jobs and were devastated by situations that happened and they survived,
yep.
When they realize that you're able to survive it, I kind of think it's like, when you survive your first broken heart and you realize that, like, you came out on the other side and you were okay.
Yep.
And then you're, like, not afraid to have your heart broken anymore. You're like,
yeah.
well, wait a minute. Actually.
Right.
Actually.
Just in other areas of my life.
Right. I actually will live.
Yeah, you will live. Exactly.
So now people are approaching, I think, like, their careers and things like that very strategically instead.
Yeah. I mean, through the pandemic, we got the gig economy is going strong, and I think people are realizing that their only safety net is them.
Amen. Say it louder for the people in the back.
Exactly. You are your own best friend and safety net. You're the only one that can create the result you want. And so if you create a business with an exit strategy in mind, the chances of you being able to successfully exit at the end of the day is much higher if you plan for it. It's basically an exit plan. It's basically a strategic plan. How am I going to build this business, create great value, and then exit it so that it creates wealth for me at the end of the day?
Exactly.
That's what it does. Yep, that's what it does.
Exactly. And then say, I am out.
Yeah. Out. And how do I do it? And what will make my business valuable? So we at Legacy Partners, we create strategic exit plans for privately held business owners. And we look at the business owner in a comprehensive fashion. So we look at, okay, what do they want to achieve business-wise? What do they want to achieve financially? And what do they want to achieve personally? So it's really a comprehensive or holistic strategy that they're creating for themselves. What do I want to achieve? And so we take them through this whole process of creating an exit plan. Often many years in advance. We're working with a tech company in Boston right now that we've been working with for several years, and they are many years out from the time that they're actually going to try to sell the company. But we're able to do evaluation, understand what are the strengths of the business, what is the weaknesses, what are the opportunities, what can we do to grow the value of that business that'll increase their return on investment when they go to sell it. What will make them more marketable in the eyes of an investor or a buyer at the end of the day? And it's not always about selling either. I mean, we have a company right now we're working with, and they're going to do what's called a recapitalization. They have a fabulous company. They've done it to the highest level they can. They're actually in a market sector that is really growing. It's really innovative, and they're tapped out in capital right now. So we're going to actually do what's called a recapitalization. We're going to sell part of the company to attract capital into it, so the company can continue to grow. So we'll sell part of the company, and the owner will retain an equity position, use that capital, grow the company, right? Yeah, very strategic. And then years down the road, they've built that business even more, we'll sell it then. So we'll actually get 2 bites of the apple, is what we say. Yeah, 2 bites of the apple. So it's not only just get me out, I want to retire, but it's, hey, I need to attract capital and an investor in my company so I can realize our strategic growth plan. And so there's a lot of reasons to do an exit strategy, and it's not just riding off into the sunset. And there's a lot of reasons to do it.
I mean, it sounds like the same approach that you take to your personal exit strategy.
Mm-hmm.
You know, like as a regular worker, when you see a financial planner, and you know, I tell people that you should get a financial planner as soon as you start working. Like if you're 25 years old and you get your first serious job, get a financial planner right away, because the sooner you start, the better.
That's right. Exactly. And it's the same thing. So in a strategic exit plan, if you go through create a master exit plan, it aligns the business. You know, so we talk about what is the value of the business today? What are the strategies and tactics that you deploy to increase the value of that business? How do we identify what is the exit strategy? Do we want to sell 100% to a third party, or do we want to do a recapitalization like I just said, and we just need to attract capital into the company so that we can still realize that future growth projection? Or do we want to give it to the next family member, or do an ESOP? You know, what is the exit strategy? And then once we create the exit strategy, and we know the value of the company, the big question, like you're saying, financial plan, what does that mean to the business owner? So what we do is we take that valuation. It's an M&A market value. So if we were to sell the company today, net of taxes, net of fees, how much investable proceeds do we have? And we put it into a financial plan so the business owner knows, if I sell my business, this is what it will look like. You know, this is our projection, our financial plan. So then they have great clarity as to the value of the business, and if there was a liquidity event, what it would mean for their family wealth and financial security for the future. And then we go take them down a couple more steps, and we walk them through creating a post-ownership plan, because we don't want them to get depressed once they sell their business.
Of course, for sure. Now, does that come along with things like, you know, covering them insurance-wise in case something were to happen to key members of the business?
Good question. Yeah, no, absolutely. Good question. So when we do the valuation, we're looking for any risk in the business, and we're looking for any opportunities that we can shore up the business value. So one of them, like you're saying, insurance risk. So if we have two partners in the business, we want to know that they have a buy-sell agreement, so that if one partner should become incapacitated or not able to work, or an untimely death or a timely death, right? So we want to know if there's those two partners that they have a buy-sell agreement in place, which is an agreement that they put into place, that if something were to happen to one of the partners, how would the ownership transition? So how would the shares be purchased by the other owner, and it's funded, for example, by an insurance policy?
Right.
Right. And so the insurance policy would activate, would give the money so that one partner could buy out the other partner's heirs, so in case of a death, for example.
Right, because you have some companies, particularly with these, you know, tech startups and things like that, where, you know, one of the partners could very well be the brains behind the company.
Yep.
You know, or the creative mind behind the company. Like if that, you know, partner goes, it's really not a matter of the finances. It's a matter of, you know, that person's brain.
The company. Right, where, you know, you're hitting it right on the head, and I think COVID and the pandemic really highlighted this. Like, what happens if I lose a key employee or my partner? What happens to the business? And is it able to sustain? Like you're saying, what if we lose the brain?
Right, well, because some people are literally irreplaceable. Like most people are not, but there are times when some people are irreplaceable. Like, I don't think you can just replace Elon Musk at Tesla.
No.
Like,
exactly.
I think if something happens to Elon Musk at Tesla, that's going to be a whole problem.
That's going to be a problem. Exactly. On so many levels, actually.
Right, exactly.
And, you're hitting it on the head. And even key employees, and having, you know, insurance for key employees. How are we going to hire somebody to replace an employee? What is our plan? So it's not even about insurance sometimes. Sometimes it's about how can we de-risk this business entirely? You know, is the business too owner dependent? And that's the brain, Elon Musk, right? Good example. So if that business is too owner dependent, how are we going to create a strategy and execute so that all of the talent isn't held within that one person, and that's development of the management team, that's depth of team members, the human capital in a business. So yeah,
exactly. Particularly if that exit plan is years out.
Yes.
You know what I'm saying? That's what I mean. Like if your exit plan is years out. Now, if you are a smaller business, like, I live in an area that's kind of a resort area, and not kind of, it is. And so there are many small businesses, and a lot of times what happens is a place just closes. Like the people retire, and it just closes. And I don't know, my guess is that they probably have just a regular financial planner, and they say, okay, it's time to close the business, and they just close, and that's it. And the business doesn't, you know what I mean? Like the business doesn't live on. We were actually talking about, during the break, we were talking about a local business that recently closed and how much we miss the business because like we miss the food at the business because they had really good food, and like now we can't eat there anymore because the people retired. But what are they supposed to do? Like work till they're 95 because we missed their sandwiches? You know what I mean? But like because they probably didn't have an exit plan for the business to keep going.
That's right. Well, hey, statistically, 80% of baby boomers do not have an exit strategy in place. And so the last thing we want to see is that people, a business closes, but if you have a strategic exit plan in place, it doesn't have to be to sell to a big private equity group, a financial buyer, or a strategic buyer. It could be as simple as, okay, is there a key employee that we can work this out with and they can take over the business, and how can we do that? So it doesn't have to be, we helped a small business owner, and they sold their company for just a couple $100,000, but it was meaningful to the business owner, but the business was able to carry on. So an exit plan doesn't have to be just for the big businesses. It's for the small guys too, so that they don't close. Because when you close a business, it hurts the community. And like you're saying, we miss the food. I'm scared to death of all these baby boomers retiring in businesses if they close. Who's going to do my dry cleaning, right?
Oh my gosh! What if my fluff and fold ever closed? Like, no, that is not. Nope, no.
Right.
And I don't even know if they ever attempted to sell their business. I feel like I would have heard about it because I live in an area that's really kind of tight knit. Like I feel like this is a business that everybody knows, and I feel like if they were trying to sell it, I would have heard about it. Like I probably would have looked into buying it. Like because they were that popular. Like what? That's crazy.
They had brand. They had brand identity. There was some value to the business. Every business has some value and can be transferred at some level. So an exit plan is for everybody. And you're right. You pointed this out, that the sooner you do it, the better off you are.
Definitely.
And then you don't have to close the business. And it can live on and continue to serve the community, or potentially if you have a nice, a business with, profitability over $1 million, we can take it to a full M&A process and have a real sale, which creates great liquidity and financial wealth and legacy for families.
For sure. We're up against a commercial break. When we get back, I'd love to talk about why some people who try to sell their businesses fail at getting the big payday that they expect. We're talking to Chris Vanderzyden about mastering your exit plan. We'll be back on the other side of the break.
Money Talk with Melanie features entrepreneurs, CEOs, and politicos who are experts in their fields. Money Talk with Melanie. Money Talk with Melanie on 98.7 The Coast.
And we're back. We are speaking with Chris Vanderzyden, and we're talking about how to master your exit plan when you own a business and planning how to get out. And some people are very strategically starting businesses and flipping them on purpose to, imagine this, enjoy their lives instead of working themselves into an early grave. Very novel idea, Chris.
Well said.
You mean we were put on this planet to work ourselves to death and then just die?
Right, and for somebody else, right?
Right, exactly. So apparently some people have caught on to this idea and said, you know what, maybe I will do this. I'll own a business and get this great big payday, but then they fail at it. What are some of the reasons why people attempt to do this and then they fail?
Yeah, it's really unfortunate, and it really it breaks my heart when I see, like you said, a business closes or a business fails to sell, and statistically, the vast majority of businesses that are brought to market do not sell. And it all points to the problem of just being ill-prepared. So the business is not positioned to attract a buyer. So that's why we say start your exit plan early, because part of the exit planning process is looking at the business, understanding the value of it. Yes, numerical value. We do M&A valuations, but what are the weaknesses that are going to prohibit you from attracting a buyer and failing when you go to sell it? So the earlier you identify those concerns, then you can reposition the business. You can shore up all the weaknesses and position the business so when you do go to market, that you'll be able to sell it. And it's lack of planning, it's lack of engaging. Everybody thinks, oh, I'm going to do my exit plan when I exit. No, you do the exit plan as early as possible. I tell the entrepreneurs in my Harvard class, start your exit plan as soon as you start your business plan, because an exit strategy will inform you as to what you should be doing in your business to build value in the business as you grow it. And so there's this tendency to just look at the dollars, right? How much money am I making? How much money am I making? But there's other aspects, too, that we need. For example, one of the biggest things with small privately held business owners is that the business is owner dependent. So you go to sell the company and the buyer realizes, if I take the owner out, there goes the brains, there goes the relationships with the customers, and I'm afraid the business is going to fail. So I'm not going to buy a business that's so owner dependent. So if you start early enough, we can create these strategies to make sure that when you do exit, the business is not dependent on you. We've kind of taken you out of the wheel, and the business continues to run, because that's one of the biggest issues. Or you're building a business and you go after the big whale of a client. Everybody likes to do that, right?
For sure.
Yeah, right. It's that shiny nickel. I just want to go after the big client, but then they go after the big client. The big client absorbs all of the resources, and they're not able to go after those minnows. They got the whale, so they don't get the minnows. So what happens is they have too much customer concentration. So a buyer comes in, looks at the business, and finds out, oh, my God, 60% of the revenue is coming from 3 customers. That's very risky.
Very.
Yeah. So we need to make sure that there's customer diversification, that there's great customer retention. You've got a good customer service policy that retains it, good human capital, or supply chain. We're seeing so many supply chain issues right now. It's happening to everybody, and it's not the business owner's fault, right?
No, certainly not.
Yeah, it's not. So, but there are things that you can do to de-risk your supply chain risk. So what can you do to make sure that your supply chain isn't interrupted? Sometimes you can't, things happen that are out of our control. But we certainly can put strategies in place that will minimize that, all contingency planning. What if this happens? Having a contingency plan. What if I lose a key employee? What if I lose a supplier? What if I lose a big customer? What happens? So those are some of the things that prohibit a business from being able to sell. And then on top of it, and you can probably guess this, they don't have good advisement. They don't know who to turn to help them.
Oh, and I was going to add to this that they lack objectivity.
Yeah.
Businesses are, your baby, right?
Right. Yeah.
That's your baby. And, just like, my radio show is my baby, right?
Yep.
And I'm not saying that I'm not open to criticism, But tread carefully is all I'm saying. Like, no, I am open to criticism. I am. I am probably my worst critic. Like, I hate to listen to my own show because I'll be the first one to pick out 5 billion things that are wrong with my show. So actually, I welcome criticism, and some people do. Like, they'll message me or whatever. I was listening to your show, and do you realize you say absolutely 25 times? Literally, one of my friends made a meme. It was actually hysterical of me just saying absolutely, because I used to say it a lot, to the point where I went to the thesaurus and looked up different words that meant absolutely. Like, that's how embarrassed I was. I was like, I have got to say other words. So you like, but you're not. But my point was that when it's your baby, you really lack objectivity to take advice about what's important, right? And about what sells and what's appealing to others. And, you know what I mean? You just do. And I think, that's a problem that just people have in general. And you really just have to, like, have a talk with yourself and say, you really need to invite people like yourself to come in and objectively evaluate things and say, okay, this is what you need to do.
Yeah, what you need to do. And then how about this? They don't know the value of their company, and they go to market, and as you said, it's their baby, and they think that the business should have a $10 million price tag, but it really is close to $5 million. So they blow the deal, and this happens. So they blow the deal off because they don't have proper advisement. They've never had an M&A proper evaluation done. So they're just coming out of the air. I think it's worth $10 million, or they've talked to somebody in their industry who's telling them this is the multiple. So we're getting five times $2 million of EBITDA. Okay, that's my 10 times, my $10 million price tag. But it's not. You relied on somebody else's feeling as to what your business was, or your own feeling as to what your business worth is. And so then they get an offer, and then they're insulted, but it really is a good offer, right?
Right.
But they walk away, and what happens? Do you think they were able to sell the business?
Nope.
No, they don't. And that's one of the reasons they fail, because they just don't have the information to make critical decisions. One of them being, what is the true value of my company? And what can I do to make it better if I want to get more money for my business, right?
Right.
So it's a lack of information and a lack of planning that really prohibits business owners from getting what they deserve at the end of the day, in selling that company. Yeah.
For sure. So how do you know when it's a good time to get out? Because I think what you have both ends of the spectrum, right? You have kind of the younger folks who I actually read an article the other day. It's going to be posted on my social media very soon. There's an article that said graduating college students expect to make, I think it was like $136,000 starting salary.
God love them.
And right. I was like, that is precious.
I love them.
I think the comment I put with the article was, of course they do.
Of course they do. Sweetie.
I thought that was so funny.
Bless your little heart.
Because I'm middle aged and I know that's not true. So you have the younger people, and I would imagine there's plenty of young entrepreneurs that think their company's going to be valuated at $2 million right out the gate. And anyone who's ever watched Shark Tanks knows the deal, right?
Right.
Overvaluated companies right off the bat.
Right.
So you have those people, right? Yep. And then you probably have older people who, you have to wrestle their companies out of their cold, dead hands, and it's time to sell. You know what?
Yeah.
So how do you know when it's time to sell?
I always say you sell a company when two things are true. One, you've built a nice company that is attractive to the buyer. So you've worked on positioning the company well. So the company's positioned, it'll attract a buyer. It's got a strong future projected cash flow. So that's what investors are looking for ultimately. is what is the future cash flow projection? Because I'm looking to buy this company for a return on investment. So does the future cash flow projection show me that I can get the ROI that I require in order to invest in this company? So if the answer to that question is yes, I have a nicely positioned company, I've got strong future cash flow, and so that if the answer to that is yes, then we know that the internal concerns, is the business ready to go to market? So we've got that tied down. What about external? Is it a good time to sell a business in the M&A marketplace? Because, the economy moves, the M&A moves with it. Actually, economy leads, the M&A market lags behind it as far as a good time to sell a business. So good companies, I will say this, good companies, strong growth rates, great intangible assets. Those companies are always going to sell. But the lower middle market tends to get dinged when our economy goes soft. So when we look at what we call the 3 C's. How much cash is available? So if we've got low tax rates and we've got corporations, strategic buyers, financial buyers that have a lot of cash on the balance sheet to be used for investing in companies, then that's a good indicator. It's a good time to go to market. So we've got lots of cash. Interest rates are cheap because most deals are going to be leveraged to some extent. So if the cost of capital is cheap, right, that's a good thing. And then if we have great confidence. So those are my 3 C's. I want to see a lot of cash. I want to see credit, cost, cheap. And I want to know my investors have confidence in the market and that if they invest in that company, they feel like they can get their return on investment. So if the company is positioned, well-positioned to go to market, they've had a valuation, they've worked on it, they've optimized the company, they've positioned it well, and the M&A marketplace, those 3 C's are in alignment, go to market. I don't care what your age is. And I say that, I don't care. If you're 30 years old, you built a good company, and it's right now we're in a fabulous time to sell a business right now. I mean, the market is ripe. If you've got a strong company, now's the time to take it to market. So if you're 40 years old and you're like, okay, I've spent 10 years building this business, I think it's good. It's a good time to sell that darn business. Absolutely. And then do it again. Become a serial entrepreneur. If you're a baby boomer and you're looking at retiring, you got to pay attention. Is your company positioned and is it the right time to go to market? Because our last big market crash was, 2008, 2009 with that housing bubble issue we had here.
Yes.
Yeah. So if you were like, I'm going to sell my business in 2009 because that's the year I turned 65 and I'm going to sell my business because I'm going to get Social Security. That was what I had in my head. 65, I'm done with the business. Well, that would have been a really bad time to sell a business because businesses were selling for pennies on the dollar.
Right.
Yeah. So you got to pay attention to your business itself. Is it positioned to attract a buyer? And what's going on in the M&A market? Are companies selling at optimal prices and terms, or are we in a bad market? And so when our economy falters, M&A lags behind it. But what happens is capital dries up in the lower middle market. So there will always be those money for big deals. I mean, we're working with a $75 million company right now. There's money for those well-positioned companies there. But the smaller guys, you're doing $1 million, $2 million of profit. Capital dries up a little bit, and that's going to show in your selling price. You might be able to sell it, but it might be a discount, what's happening in 2009.
I feel like we are right on the precipice, maybe of a recession. Like we just had a down quarter. If we get another one, we'll be officially in a recession.
Yep, 2 quarters negative growth.
Right.
We are. Yep, and all the banks. Oh my God, all the numbers are coming out this week. J.P. Morgan, Deutsche Bank. When are we going to be in a recession? We look at inverted yield curves. So if you see so for example, if you want to compare the 2-year, 10-year, sometimes people do 30-year, 5-year. But if the 2-year Treasury rate is higher than the 10-year Treasury rate, that's called an inverted yield curve. And what that's telling us is that investors feel that the short term is riskier. That's why they're going to pay out a higher yield.
Got you.
So that means investors are going, okay, we're seeing it as being risky. So I think it inverted for a nanosecond last week. But if we start to watch that yield curve inverting, that's usually an indicator that we're looking at a recession. So So that's investors saying, I feel like the short term is risky as opposed to the long term. Yeah.
Gotcha. Okay.
Yeah.
All right.
Yeah.
All right. And can you tell me in 2 minutes?
Yeah. 2 minutes. I'm good at that.
I just got the 2-minute warning. That's why I said in 2 minutes. How do you know if a business owner will have enough money to go on to the next chapter of their life to sell their business? Huh?
Yeah, very important, because most people who advise business owners on how to sell their business are very transaction oriented, because they're going to get paid on the transaction.
They sure are.
Yes, but if you're working with somebody like a Legacy Partners, we're independent. We're not going to get paid on that transaction to do your exit plan. What we do is we value the company for M&A purposes, and our valuations are tight. We ran last year at 95% of true market value when they sold. Yeah, we've got tight valuations, but what we do is we say, okay, this is what we think the deal structure is going to be, whether it's an asset sale or stock sale. We do a tax to impact analysis, and then we take out projected fees. We take that net amount out and we put it into a personal financial plan so the owner knows this is the investable proceeds, and if we invest it at whatever risk factor they want to invest it at, say they want to draw at a 5% rate, historic average is running 8% return rate, right? So what will that look like if we invest that? What will it look like in 20 years? How will I have enough money to live the life that I'm enjoying today and be able to live out my life comfortably? That's the big question. It's the very question. You're right to ask it.
You're absolutely right. You can get Chris. Now I've been pronouncing your name. I've been pronouncing your name the whole show, and now all of a sudden I'm stuck. Vanderzyden's books on Amazon and anywhere where books are sold. Where can they follow you on social media and hop on your website to get more advice or contact you?
Yeah, LegacyPartnersLLP.com is our website. And the best place to find me is on LinkedIn, and it's Chris Vanderzyden. I'm really easy to find. You can Google me, you'll find me. And my book will come up on Amazon.
Excellent.
And it tells you exactly what to do.
Excellent. Thank you so much for being on the show. Lots of great information. We appreciate you so much. Thank you so much.
Thank you, Melanie. A pleasure.
Yep. Have a great night.
Money Talk with Melanie on 98.7 The Coast.
Welcome back to Money Talk with Melanie. If you missed the first hour, you missed quite a bit of valuable information. My first hour guest was Chris Vanderzyden. She's a principal at Legacy Experts. And what she specializes in is exit plan strategies for businesses, small and large and in between, and actually also entrepreneurs who what their business is flipping businesses. It was just some really good information that talked about how you can strategize an exit plan for your business and just establish that and plan for it like you would do any other kind of financial planning. So if you missed that first hour and you're just joining us, you can certainly listen to Money Talk with Melanie as a podcast when it is posted in the next day or two on 98.7 The Coast website or on my Facebook page at Money Talk with Melanie on Facebook or on any of my social media at Money Talk Mel on Twitter. And on LinkedIn at Melanie Collette on LinkedIn or Instagram or anywhere where podcasts are found. Apple, Spotify, iHeartRadio, really literally anywhere. Blueberry, it's everywhere. You can't hide from Money Talk with Melanie. Okay, that was a little creepy. Anyway, this is my second hour guest. It's about to get a little spicy in a few minutes. I have Chris Shaver, who is the couples whisperer, who's going to talk to us about money, trust, and financial infidelity. It is a really hot topic, just in this day and age with people fighting the patriarchy and all, and just money really is a controversial issue in companies. And there was a recent survey done, I think Bloomberg did that survey, that said that some couples consider financial infidelity to be worse than physical infidelity. I still don't know how I feel about that. I don't know. I have to think about that. I really go back and forth about that. I'm not good with any kind of infidelity. I got to be honest. How about no infidelity? How about that? I think I'm going with no infidelity at all. Maybe I'm crazy. But I think I'm going with the relationship that has zero infidelity. That's the kind of relationship that I like. So, but before we get to our guest, let's talk a little bit about some things that are happening in the news. I saw an article on CNBC's website that talked about personal finance education and how it's gaining momentum across the country. Now, when I started teaching personal finance, which was about 12 years ago, it was only required in 6 states. One of the very few things that New Jersey does right is require personal finance by law. It's a graduation requirement. And I keep telling my students how fortunate they are to get this kind of education. They're, a lot of parents never had access to financial literacy, and it's just very important information to have. I didn't have it growing up. I had to kind of learn as I go. And they get access to this information. It's just very important information, knowing the difference between a debit and a credit card. And if you're not the kind of person who is intellectually curious and doesn't look stuff up to learn stuff, I was the type of kid that grew up with a set of encyclopedias that got updated every couple of years. I was the type of kid that walked to the library when I wanted to know stuff. Okay, I was a nerd. I'm sure that's probably not news to anyone who knows me. But nobody's super surprised by that information. But a lot of kids are not that way. So if you're not curious or want to know stuff or super cautious, or some people use the word paranoid about the way you do things, you're just flying by the seat of your pants and just doing stuff and making a lot of unnecessary financial mistakes that are damaging. So that's why financial literacy is super important. In fact, I saw an article the other day that asked the question, should employers be providing their employees with financial literacy and financial counseling? That's how pervasive financial illiteracy is, just throughout the country. I mean, as I'm teaching kids financial literacy in the classroom, I have to tell you guys, your kids are giving up a lot of personal family information in the classroom. Just like a side note. Oh yeah, well my mom. Oh, that's why my mom does that. And it's some of it's not good news. But I'm just saying, when I explain certain situations and certain things and why things happen a certain way financially, now they understand because I'm explaining them in the classroom. But it's spreading the personal finance in the classroom. They're not teaching economics in the classroom as much. I also happen to be privileged to teach economics as well. Here's the thing. You really do need both in the classroom. In order to really understand what's going on in the country, what is going on with inflation, you can't just take, in my opinion, my not so humble opinion, you just can't take the word of pundits on TV and politicians telling you anything and everything. Politicians routinely, on both sides of the aisle, make all kinds of promises, tell you all kinds of things that they're going to do that they are literally unable to do. And part of the reason why voters don't know that they are unable to do those things is because they don't understand economics, because they don't know anything about economics and the way they work in the United States, which is why we need to be taught economics and personal finance. You need to be taught both. You need to understand how personal finance and economics interact with each other, and how economics and personal finance and the Constitution, the laws, all those things interact with each other. That's why Money Talk with Melanie exists, by the way. So by the by, because you need to understand how all of those things interact with each other and why your vote is so important. And understanding those things informs how you vote, or should. And should you, are you really informed if you don't know how all those things interact with each other? And when a politician on either side of the aisle opens their mouth and says that they're going to do something for you that they really can't do, you'll know. You'll know. For example, if a municipal politician or candidate says that they're going to do something about Roe v. Wade, just an example, they cannot, because they don't vote on something like that. That's just a very blatant example. If a senator tells you they're going to do something about your trash pickup, that would be a lie, because they cannot. They're not involved in that at all. So those are just, you need to know about those kind of things. And that's why personal finance education and economics and the Constitution, civics, all those things are super important in the classroom. And so if you want to get involved in your child's education, start with your school board. Start with your state legislators, but you need to make sure in your state that your child's being taught personal finance. And not for nothing, people, let's just be honest. With the amount of information that we have access to, there is no reason why, if your state's not providing it, that you can't provide it. There's really no excuse in this day and age. You have a phone with a whole lot of information. Today I had a lesson that opened up with, what do you think the phrase "don't put your eggs all in one basket" means? I was teaching a lesson on diversifying stocks. And the opening question was, what do you think the phrase "don't put your eggs all in one basket" means? And I said, if you don't know what it means, look it up. My class happens to take place in a computer lab. And one of my students actually said to me, look it up where? And I was like, on that computer with the Google on it. Like, what? The one where you watch videos when I'm asking you to do work. You can actually look up school stuff on that. You have a whole phone with you can use that. There's educational stuff on there. So I'm just saying, if you're about to buy a car and you're curious about interest rates, if you are curious about educational stuff, look it up. Do yourself a favor and look up information. Originally, the internet was called the Information Highway. Before, we watched videos and stuff on there. This is the advantage of being old. Because, I was around when there was no internet. And it was originally the Information Superhighway. Originally, when the internet first came out, it was for information. There were no videos. There was no TikTok. There was no... It was for information. Strictly for information. So I'm just saying, use it. Get a new, reason for the internet and help yourself and become financially literate. It is good for you. You're going to love it. So on the other side of the break, we're going to talk financial infidelity. I think you should listen up. You might be unfaithful financially and not even know it. That's what I suspect. So we're going to talk about that with Chris Shaver, the couples whisperer, on the other side of the break. We'll be right back.
Money Talk with Melanie features lively discussions of a wide range of global, domestic, and kitchen table financial topics. Money Talk with Melanie on 98.7 The Coast.
Welcome back to Money Talk with Melanie. We are talking about financial infidelity this hour. We're supposed to have Chris Shaver, the couples whisperer this hour to talk about financial infidelity, money, trust, and financial infidelity. We're having a bit of trouble getting in touch with him, but we'll keep trying. In the meantime, I thought I'd discuss a bit of information about financial infidelity. When I was doing research for the show and in my discussion with Chris, I looked up the definition, being the academic that I am, the definition of financial infidelity, and not surprisingly, Investopedia had an official definition for financial infidelity. It says it's when couples with combined finances, I think that's key, lie to each other about money. Examples of financial infidelity include hiding existing debts, excessive expenditures without notifying the other partner, and lying about the use of money. So, I think the key to that definition is with combined finances, which is why I've always been a fan of the not combined finances. Now, many people have disagreed with me about the whole not combining finances when you're married or when you're in a serious relationship. Like, they think that I'm wrong for not wanting to combine finances, but I don't mean not sharing. I thought that my position was very healthy. Like, have a household financial account where you split the bills very fairly, and then you each have your own account. Like, why is it anybody's business how much I spend on my personal care? It's called personal for a reason, because it's personal. It's my personal care. And I don't think that anyone else should judge what I think is reasonable for my personal care because it's personal. And if I work for it, then why should anybody like have a say, an opinion, a critique on what that dollar amount is if I can also afford to pay my fair share of the household bills? So why is anybody else commenting on that if I'm contributing my fair share to the household finances? So I think are you lying? Are you really lying about that if you are contributing? So I think that you kind of absolve yourself from the financial infidelity if you avoid combining your finances in the first place. Now, is that a slippery slope? Perhaps it is a slippery slope. If you want to comment on that, feel free to tweet me at Money Talk Mel or at 98.7 The Coast, or you can call us at 609-522-0987 and tell me that I'm totally wrong. You can do that. That I'm selfish. I've heard all of this before. I have pretty thick skin. So you can tell me any of those things. I'm totally good with that. But I think if you can avoid, in my opinion, if you can avoid combining finances, then you should. That's just my personal opinion. I honestly think you can avoid arguments if you avoid combining your finances, especially if you're at a certain place in life, a certain juncture in life. You know, I'm in the middle-aged stage of my life. Certain decisions have already been made. You know, certain progress has already been made. So, you know, and I'm kind of set in my ways. So why would I combine my finances with somebody? I don't know. I don't see a reason. I don't see a reason to do that. Now, how serious can financial infidelity be? It can be very serious. Many people get divorced over financial infidelity. Matter of fact, 10% of couples have been divorced over financial infidelity. A 2018 study showed that 76% of married couples involved in financial infidelity say the experience negatively impacted their relationship, and 10% actually got divorced over it. I don't know. That's pretty sad to get divorced. You kind of think it's sad to get divorced over money, but I think that you're not getting divorced over money. I think what they're getting divorced over is the lying and the deceit. Because if you're being unfaithful with money, that means you're looking right in your partner's face and telling stories. And I think that's the problem. I think you're looking right in your mate's face and hiding money from them. That's the problem. And when you have, when you have arrangements where you have to rely on a person for your finances, that's the problem. And I believe in traditional marriage, right? Husband, wife, 2 kids, dog, white picket fence, all that good stuff. I do. I am all for that, as long as it's not me. Is that terrible? Is that awful? As long as it's not me, because I don't trust anybody that much. I'm just being honest. I just don't. I need my own stuff. I need my own bank account. I need my own job. I need my own stuff. I need all my own stuff. Like, I feel like I just need my own stuff. I don't trust anybody enough to have that going on. But it's really a serious problem. And how do you trust somebody enough to do that? And there are mostly women out here who hope. There's women who literally don't know, and I would imagine in this day and age, probably men maybe, who, matter of fact, I know for a fact that there are men who, the women in the household run all the finances. Like, they just, they dump their paycheck in the checking account, and their wives pay all the bills and all that stuff, and they have no idea how much money they have, really. Like, they literally don't. And what if their wife just started doing crazy stuff with their money? That would be financial infidelity, and that would be a serious problem. So I don't think that people are, I think it's misleading to say that people are getting divorced over financial infidelity. I think it's the lying that people are it's the lying on a regular basis that people have a problem with. I think that's the problem. Like, if you're lying to your mate on a regular basis, people have an issue with it. And, it's, I read an article today that said secrecy and dishonesty around spending creates rifts, which is an understatement of the year, in relationships. And why aren't we talking about it more? And we definitely should be talking about it more. That was U.S. News and World Report that reported about the 76% of married couples who are involved in financial infidelity. That was crazy. And Bloomberg was the one that said financial infidelity is just as bad as physical cheating transgressions. People who hold secret debts and undisclosed credit cards and have hidden check. I think women having hidden checking or savings accounts is huge. I know that's debated on social media on a regular basis, whether or not women have hidden checkings or savings accounts. It was debated recently at least twice on my social media. I'll tell you why this happens, because, and I've defended this many times, I've never had a secret one. Wait a minute. Let me think about this. Have I ever had a secret savings account? I don't think it was a secret. I think I told my husbands that I had one. I have one, and it's not secret. Yes, I have a separate savings account, and no, you can't know how much is in it. It's mine. I I don't know what to tell you about that. I think we got in touch with our guest, Chris Shaver. He is the couple's whisperer. Let me tell you a bit about him. He's a certified Berkman consultant. He's on a mission to help save 100 million couples from divorce or painful breakups. He offers couples a revolutionary new way to navigate the 22 pairs of opposite behaviors that trip them up and tear them apart to restore love and connection. I could have used him a couple times, literally a couple times. Chris is the author of the upcoming book, Marriage Cure, The Proven Way to Restore Your Love. We're going to talk to him about money, trust, and financial infidelity. I'd like to welcome to the show, Chris Shaver.
Melanie, how are you? It's wonderful to be here.
Hi. I hope you're having an okay night. How are you?
I'm having a great night. Yeah, it's a glorious day here in Pennsylvania.
Ah, okay. Very good. So I was just yammering away about financial infidelity. We were having a hard time getting in touch with you. I'm glad you're here.
Yeah, I'm sorry. The world is crazy at this point in my life. Doors knock, people show up. 7 things happen all day long. Nothing happens, and all of a sudden, 7 things happen.
That is exactly how the world works. I completely hear you.
I'm so sorry. Anyway, here I am. We're here to talk about marital infidelity or monetary infidelity.
Yes, indeed, monetary infidelity. It is what we're discussing. So I clued the audience in on what exactly financial infidelity is. Believe it or not, Investopedia had an official definition for financial infidelity. And actually, one of the things that they highlighted is that couples with combined finances lie to each other about their money. And one of the things that I said was that, if you don't combine your finances, then you can't be financially unfaithful. Or at least that was my position.
Well, that's an interesting thing because, what I do, I have a what I would call a professional grade assessment that measures people's really, ultimately it's measuring their motivations, what motivates you to do what you do. But the motivations express as behaviors. And I always say that arguments don't, end marriages. Behaviors end marriages. And so infidelity of any kind is a behavior, right?
For sure.
It's I'm doing something behind your back without you knowing it. That's affecting us, our relationship. And at the core of it is as disrespectful an act as you could possibly do. Anytime that, you're in a trust relationship, whether it's, I trust you with my heart or I trust you with my pocketbook, that's a trust relationship. So I've been trying to think about what to say about this because what I'm not a specialist in, but what I've read about, because I'm interested in people, is I've read about sociopathic and psychopathic behavior. And I've read how psychopaths and sociopaths will do this to their partners. And you're at the far end of human behavior at that point where somebody will set out deliberately to ruin you. But that's not what I can talk to about authoritatively. And it's weirder out on that far end because even the people who are world experts in psychopathy or whatever you would call it, have a difficult time discerning when they're in the presence of one because these people are so extremely good at hiding their intentions from others. But let's say that we're not talking about that. Let's just say we're talking about the garden variety of, hey, I bought a car, honey. Is that financial infidelity? I bought a car without telling you?
I feel like it is. Like, whenever I see those Christmas commercials, like, the wife walks outside and there's a big bow with a Lexus. Like, I knew I wasn't the only one until I saw those memes on social media that thought, you bought a car without talking to me? That's Like unless we had it like that. You know what I mean? Like unless we had that kind of relationship, like if your man is rolling like that, like that's the kind of situation you all are in, okay. But I don't think like the average family is operating like that, like where your man can just buy you a Lexus.
Right. So
you know what I mean? I don't think most people are in that situation.
Do. And so there's this other way that you can turn the conversation based on something I am expert in, and what you're talking about behaviorally between a couple at the level that we're talking here is we're talking about incentives and rewards and the behavior that circles around that and the expectations. I'm a Berkman consultant, and Berkman measures our behaviors and our needs for behavior from other people. And every one of the behaviors, the 22 behaviors that Berkman measures, expresses as a pair of opposite behaviors. So in this area of incentives and rewards, people who show up in a relationship with team-based behaviors, they see the world as, all of our boats rise together or they don't rise at all. That's very team-oriented behavior. I'll give up something for the team, you'll give up something for the team, but the team wins. So the other end, this pair of opposite behaviors, the other end is motivated competitively by individual achievement, and you could say it's what's in it for me. And if we both compete hard and we both, and relationships can work this way. We both compete hard. We both have a very realistically based relationship where we're keeping score all the time. That's what a relationship between two people like that would look like. Is I don't expect to give up anything for the team. I expect to get what's coming to me based on what I put into it. So, however, when you get this imbalance where one person whose competitive urges, let's say, are out of check, out of balance, is now taking advantage of somebody who's given it up for the team, I think that's along the lines of what you could say where financial infidelity could arise if those two people were just still relatively being straight with each other and the other person really just wasn't trying to get over on the other one. So if we stay out of the bounds of it's that area where you're talking about people who might ought to be in jail.
Okay.
Right. If a sociopath who's deliberately going to bankrupt somebody and then leave, that person ought to be in jail.
Yeah.
In a law-based society, that person should be in jail.
Right.
A psychopath will do it for sport. Same thing. That person should be in jail. So the only thing, I was trying to think, like on this conversation, the people who I think are most at risk are the ones who show up and see the world through the lens of team. Is I'm willing to give it up, and that's can be a very trusting position to be in. In other words, I'm not going to pay that close of attention because I trust you with the rewards that we've collected as a couple.
But that is a very, in my opinion, and maybe it's just because I don't trust people. I trust no one, like seriously. And but I don't think it's like having trust issues. I think it's just being practical. Because you don't make financial decisions with your heart. That is not where you make financial decisions. You make them with your brain. And people say, well, when it comes to marriage, that's nope. That is not how it works.
You're expressing the behavioral other side of that equation. So it's what's in it for me means I'm going to be realistic about this. Trust but verify is another way to say that.
Right.
But you do have to understand that within the range of normal human behavior, half of the people on the planet are just going to trust and will see the core of their relationship. It will be extremely important to them that trust is at the core of it. Not trust but verify, but trust. Our relationship is based on the value, the principle, the core of trust.
Okay, but you're doing that. Okay, but you're doing that, and you're not basing that on anything. You do that, and then you look at the statistics. Okay, so you do that, but what are you doing that based on? You're
doing it based on your personality.
Right.
You're doing it based on how you're wired.
Exactly. And then go Google the statistics of people who do that and see how that works out for them. I'm just being honest.
That can be the problem. But, so what was interesting to me when I first became a Berkman consultant, I had a lot of questions about this. And so one of the things that I asked was, in the Berkman system, what percentage of people were on this lower end, this very team-focused, team-based, versus the higher side of the equation? And because these things express universally as a bell curve.
Yes.
Half of us are over here, half of us are over there.
Yep.
Most of us are gathered in the middle, but
right.
there's 10% outliers, right?
Right.
So, but within the Berkman system, and I knew that Berkman was being used primarily with Fortune 100 companies, so very large companies. And what I was told was 75% of the people in the Berkman system are on the low end of that scale. And what that told me, Melanie, was that those human beings are wonderful workers in large corporate structures, where you have to, your reward is not always hung on you; it's hung on your team. So the behavior itself, is rewarded, if you would, and just you can see that when a lot of people gather together and people are willing to give it up for the team, wonderful things can be accomplished. The behavior is not outside the range of what has gotten the human race to where we've gotten. It's a wonderful behavior. But if you're married to somebody who's on that high end of the scale, you could throw addiction into here. I mean, addiction would be another place where you find a human being stop being trustworthy.
Right.
But it's all of those things. What I would say to somebody, I'm with you. I've always been in a relationship where things are out in the open. That would be the warning sign number one for me, is if things are not out in the open for me to see, now I've got a problem. And
sure.
I guess that's trust but verify, right? That's trust but verify. But I would say that if you're worried about it, if you're getting cues and you ask to see finances and the response is not yes immediately, if it's give me a couple weeks and I'll get back to you, you got a big and believe me, I've worked with clients where that was the answer. A wife was being taken to the cleaners in a divorce, and the answer was, I need a couple months, and I'll get back to you with the whole picture. And in that couple months, that money ended up in the Far East.
See? That's what I'm saying. And it seems to me, it's just been my personal experience, that it's always the person who doesn't make a lot of money who wants to combine the finances. I'm sure that you do. So that you can have access to that money and spend it. Like, no. And you should be having, and this is what I usually recommend, if you are dead set on combining your finances, then you should be having a monthly finance meeting, going over the budget so that everything is transparent and you know where every penny in your household is going. Fine. You want your man to be responsible for paying all the bills and he wants to run everything. Fine, sis. That's what you want to do. But you better make doggone sure that you have access to everything. You better have every PIN number, every statement, access to everything, because there is absolutely no reason why you shouldn't have access to all of that.
There's two things that you said there that I heard, actually. But the first one was there has to be a system. There has to be a system that we've agreed upon. And that's yet another part of personality. It's structure. And so sometimes I've worked in creative fields where my creativity and my inability to follow a system was rewarded, but it's not my strong suit when it comes to money. So there needing to be a system was painful to me when it came to balancing our finances in a relationship, but I understood that it was critical for both of us to have trust. So you're exactly spot on, is that whether your partner is systematic or not, it's not a place where the answer is, no, it's okay, you can't be systematic, right? That's not the right answer. The right answer is, there's a system, we all know what the system is, we follow the system, there's transparency in the system, and then we don't have any problems. The other part of that, however, is if you trust and you're never verifying, you're still just as vulnerable as you were when you didn't have a system.
That's exactly right. Now,
Yeah.
you weren't on the line when I mentioned that there was a survey done by Bloomberg that said that overall, many Americans said that financial infidelity was just as bad as physical cheating. How do you feel about that?
Oh, I believe it's the same thing, because ultimately in any relationship, it's why I started with saying whether it's sexual infidelity, whether it's emotional infidelity, whether it's financial infidelity. Infidelity is breaking trust, and trust is at the core of respect, and respect is at the core of what you have as a relationship. In a relationship, if you have no respect, because you have no trust, you have nothing. You have
right.
less than nothing. You have somebody who's going to take you down, and not, without compunction, without conscience.
Right, because what I said was that I don't think it's the money that's the issue. I said I think it's the lying. That's the issue. And even with the sexual infidelity, I think it's like the same thing. I think that what people can't get over, I don't think it's the sex. I think it's like, oh my God, when you said you were there, you totally had no problem lying to me and saying you were that other place. You know what I mean? I think that is the part that gets to you. That's the part that grinds your nerves.
Well, there's 22 pairs of opposite behaviors, but I break it down simply. I say there's 3 fights in every relationship. Number 1 fight is respect, and respect actually gets delivered through one-to-one communication. And the naked uncovering of any kind of infidelity is an extremely direct statement of respect, or lack thereof.
True.
Right? It's also, number 2, it's maybe the worst decision-making fight you'll ever have, because somebody made a decision without you entirely in something that desperately affects every aspect of your life, maybe for the rest of your life. So those 2 fights are happening right in front of you, and if you're in that relationship, run. Just get out.
So I was going to ask you if there's any way to survive a repeated financial infidelity or any kind of infidelity. Like if somebody is a repeat offender, how do you know when to get away from that person? Like on the one hand, you want to be God knows that in a marriage, forgiveness is key, says the 2-time divorcee. But I digress. Forgiveness, but forgiveness is a big part of marriage, right? So how do you know when it's time to cut bait and run?
Well, did I stop at the bar on the way home and have a couple extra drinks when I said I was going to be home? Or did I run up $30,000 in credit card debt?
But, what if it was only $25,000 in credit card debt? What's the threshold? And okay, if you're a millionaire and it was $30,000, is that a big deal? But if you only make $30,000 a year and it was $30,000 in debt, then that might be different.
Right. And so let's talk about decision-making for a second, because one of the things Berkman measures, it measures your behavior, and it measures your need for any of those 22 behaviors from your partner. So in decision-making is assertiveness is at the core of decision-making. Either I'm going to lead from the front, or we're going to talk about it collaboratively. You may want me to lead from the front. You may want me to be the guy making the decisions, or your underlying need might be, hey, we're going to talk about every decision, or it might be, you get to lead these areas, but when it comes to money, we're going to talk about it. So whatever that agreement is, however the needs shake out for you and your partner, spouse, that is the core of trust. The core of trust is we make decisions this way. We've agreed on making decisions this way. If somebody violates your needs around something as important as money, and it's interesting that the word infidelity attaches to it, right? Because sex is every bit, it tells you, sexual infidelity is a crisis in a marriage. So any kind of emotional infidelity, if you're in a relationship and your spouse or partner starts flirting with somebody else, there's some emotional infidelity going on there. They call whatever they want, but it's emotional infidelity. If they're doing it right in front of you, it's even worse. And the decision it can be...
I can assure you that would be problematic.
Yeah, right, of course it would. So,
no man attached to me would dare.
Right, because there's an implicit decision, or in that sense, it's like, this is how we roll. We've made that decision, right? There are people who have open marriages. They make that decision.
True.
But it's a decision made. And then it becomes just structure. It's how we roll. So, and all of these things is, what you were saying is, it's not the act itself. It's the behavior that violates your expectation.
Right.
Call it a need, call it an expectation. Either way, when that's violated, you feel violated. And if you feel violated, you won't, then the downhill of that is you've lost trust, you feel disrespected, and then all kinds of your emotions get engaged. And that's why they always call anger a secondary emotion, because it's the need being violated that really produces the hit. So to me, there is an important moment here of saying, how do we make decisions as a couple? Let's get that above the table. So, and the decision can be, our budget is X, and so whether we're making $10 million a week or we're making $10 a week, our budget is X, is a structure, and we live with it. And so if you stop at a bar or you stop to pick up a boat and you're outside of that framework, you know what I mean? If you're outside of that framework and that's the way we do it, now you've got a problem. So, and the scale of the problem can determine whether you're forgiving or you say, you know what, or maybe it's the third time, or maybe you're a fifth offender. All of that stuff, that's where you have to figure out where you draw the line. But you can get also in play, there's a lot of funky stuff that can happen with couples. But if we're just talking about normal couples who have an otherwise good relationship, you have to decide how the decisions are going to be made around money, what the thresholds are for independence. And, if you can't stop at the bar and have a drink, and that's what you like to do and where your friends are gathering, maybe you need to renegotiate that before you just go do it. But it's a decision-making process as a couple. Money is.
For sure.
Your needs are in overdrive during decision-making.
For sure. Unfortunately, we're up against the close of the hour. I want to thank you for being on the show this evening. It's Chris Shaver, the Couples Whisperer, and you have a great night.
Thank you, Melanie. I'm so sorry I was late, but it was wonderful chatting with you.
Yep, you have a good night.
All right, bye-bye.
All right, bye-bye.
Money Talk with Melanie features lively discussions of a wide range of global, domestic, and kitchen table financial topics. Money Talk with Melanie on 98.7 The Coast.
Welcome back to Money Talk with Melanie. I want to thank my guests this evening. And next week on Money Talk with Melanie, we will have two wonderful guests. And remember, ladies and gentlemen, this is very important because after all, it's your money.